Welcome, everyone, to this week's edition of the Commercial Real Estate 101 Meetup Group. For those of you guys who are tuning in for the first time, we actually started this group back in April of 2021, kind of in response to COVID. It was very hard for us to meet together to talk about different commercial real estate topics, and I thought, what better way to do it than digitally? And so we started the LinkedIn group back in April of 2021, and we invite speakers pretty much every other week to talk about a variety of different commercial real estate topics. And today, we have the honor of having George Connors, who's a friend of mine locally and also a commercial insurance agent who specializes in commercial insurance. And so he's going to talk a little bit about that, the process, and give us a feel for some of the things you need to consider as you're looking to insure property and also your business, because, you know, there's a lot of people who listen to this podcast who are either real estate professionals and they represent business owners or investors, or maybe you're an investor or developer and you're looking to analyze all the variables that you need to consider as you're going into some of these projects. And I think that George can illuminate some of these items, and hopefully you can take away some tidbits of value from this podcast to learn more about the industry. So welcome, George.
Thank you.
Okay.
Glad to be here.
Oh, for sure. So first off, when we first start off this podcast, what we like to talk about a little bit is really your backstory. So if you could tell us a little bit about yourself, and that'd be great.
Yeah. So I grew up in the DC area, made it to Kentucky by way of a small liberal arts school called Center College. And upon graduation, a company who I had since spent many years with was opening up an office in Louisville, Kentucky, coming to the market with a carrier that was new to the state. And that's how I got introduced to the insurance world. It was a great opportunity. In the beginning, for the first probably 2 years, they pretty much just had me in their personal lines department, fell into some good commercial clients early on, really educated myself on it pretty quick and with help of others, and just kind of fell in love with all the moving pieces there are insuring a property. It goes, and we'll go into it, but it goes much beyond just getting the right replacement cost on there.
Oh, for sure. Yeah, I know. And I've learned a lot more about commercial insurance through our conversations and just dealing with business owners and investors out there, because a lot of times people try to just shop insurance rates and try to get the cheapest insurance possible, but then they don't think about the implications of what exactly that means in the broader sense. And, just because
whatever the bank requires is a lot of what I hear a lot too, but you want to protect yourself.
Oh, for sure. That makes complete sense. So one of the things that I'm kind of interested in is why commercial insurance, and you kind of touched on it a little bit, but I thought if you could elaborate a little bit on that, I think it'd be interesting. Because similar to me, I got in the commercial real estate space outside. I was a software engineer and then just so happened to fall into commercial real estate brokerage. But I'm kind of interested to hear your backstory.
Like I said, it was, kind of fell into it. I didn't go to college for it. I went to college for financial economics, and it definitely is a financial product to a degree for sure. But I really enjoy and it's a changing landscape as well. As in commercial insurance as well, codes change, things like that change, and underwriting guidelines and the way policies are written are evolving a bit in commercial insurance, especially when it comes to areas like cyber. But I really enjoy the complexity of it.
Oh, for sure. No, and it definitely is complex. And we'll be talking a little bit about, the nuances of it a little bit within this podcast as well. So one thing I wanted to ask you is, what is the role of an insurance, agent, similar to what you're talking about? So it's similar to what you do. If you could kind of elaborate exactly what you guys do on a day-to-day basis.
So at the end of the day, we want to be a true risk management advisor. We want to lay out, hey, here are the risks that you can face in your business. Here's the way to protect against them in terms of policies. And it's really advising business owners, whether it be on their purchase of a property and how to insure that, or how to insure their operations. They need an advisor and someone who has seen claims, both covered and not covered. A lot of times when claims are not covered, you'll hear, oh, well, my agent never told me that. So it's definitely one of those things. While some do try to commoditize it and just come in with pricing, it's not a commodity. Commercial, one policy is not the same as another policy. They might both cover the same amount, but how it's paid out, when it's paid out, the types of situations it's paid out in can vary from situation to situation. So our job as a true risk advisor is to lay forth the potential areas where there could be loss of income or certain situations where rebuilding will get more expensive. For example, and just to give a brief example, insuring an older building versus a newer building. There are different coverages you need depending on the age of the building. Obviously, I'm sure a lot of your listeners are familiar with, capital expenditure and all that being more expensive with commercial buildings. Well, the insurance is also more expensive. More things can go wrong, but understanding all that and then sharing that knowledge with your client is really what gets me out of bed every day.
That's awesome. Yeah, I know. And I'll attest to that too, because a lot of times, in particular, when you're dealing with newer business owners or people that invest maybe in the residential side, and now they're transitioning more into the commercial side, is that they start seeing some of these price tags for different things, and commercial included, and they just are kind of shocked by the differences as far as what's required as far as coverage, or, then, and in a situation where, they try to skimp on certain things, then you run the risk of, potentially having a bad situation come about. And again, insurance insures for something that may not happen. And you're right, you may pay the premium forever and not have to worry, or nothing may not happen to you, but that one time where it does, it can be quite catastrophic. And, similar to you, I've seen business owners that have been taken under because of something that happened that they couldn't cover as far as their insurance was concerned. So it is one of those things where it's pretty important. And as far as your role is concerned too, I mean, you work with a lot of different carriers as well. So that's another thing a lot of people don't realize, is that there's a lot of insurance agents too have relationships with a lot of different carriers, and they place business owners and investors depending on what the carrier is specialized in. And I'm sure you probably have certain carriers that, if it's a restaurant owner that's looking for insuring their restaurant, there's probably certain carriers that do it. Some carriers may not. And so you have those relationships, and you have those, the understanding of the different variables and different factors at play, so that you can say, okay, well, instead of going here because it's not going to work, let's go over here, and maybe there's a way we can orchestrate the deal so it works best for you. So
yeah, and it's important. I say your relationships with your underwriters is just important as your relationship with your clients, and that's something that I've been fortunate enough to build relationships with underwriters and a number of companies where, they might do something for you that if you didn't have that relationship, they wouldn't trust you to write a certain piece of business, for example.
For sure. No, certainly. So one of the things I want to touch on is, what exactly are some of the mistakes business owners make in particular when evaluating their insurance needs? And again, just to give you some backdrop on the audience that we have, commercial brokers that are out there that represent business owners. We have business owners that tune in as well, whether they're in some capacity within the commercial space. So if you could touch on maybe some of the mistakes that you see business owners make as pertaining to their insurance needs, both property and even business, I think that would be helpful.
Yeah, so let's just start with property. Number one mistake you see is wanting to insure the building either as low as possible, or in some cases the purchase price, which for an insurance perspective, you're insuring it for what it costs to rebuild it, not the value of it. And here in Kentucky, we just, with the recent tornadoes that came through, we saw that issue a lot. Our agency actually does not have a footprint in Maysfield where that tornado came through, but again, we have good relationships with our carriers who do write business there, and they are dealing with underinsurance left and right over there. Because the cost of construction, has gone up anywhere from 17 to 30%, depending on where you are in the country and what you're doing. Well, most policies, they might have an inflation guard of like 4%. 4% is not cutting it in the current environment we're in right now. And to the point of, some people wanting to just insure what they're purchasing it for or what debt they have on it. The bank's fine with that. From a bank's perspective, all they care is they're going to be paid back on their principal if something happens to that building. So they just require the minimum insurance on it. Doesn't mean that's the route you should go. And especially with building property, a lot of times most policies have what is called a co-insurance clause, and anyone's allowed, anyone feel free to reach out to me to get in more depth if you have more questions over this. But brief overview of co-insurance, there's a little formula with it. If you do not have the building insured, some co-insurance clause are 80, 90, or 100%. So if you're not insuring your building to at least 80, 90, 100% of the true rebuild cost, regardless of the size of claim, you will be hit with the penalty. So a lot of people don't realize that. So, let's say you have $1 million property and, oh, I'm going to insure it for 700,000. And, the likelihood of a total loss is very small, but, more likely to have a partial loss. And then so there's an assumption sometimes with building owners that, oh, well, if I have it insured for 700,000, if I have a claim for 500,000, they're going to give me all that 500,000. If you're not insured properly, and you have to look at the language of your contract, each contract's different on co-insurance specifically. But depending on your co-insurance clause in your contract, if the contract says you have to have 100% co-insurance clause on there, you're going to be hit with a penalty regardless of the size of the claim. So that's something that unfortunately is not explained as much as it should be to business owners.
I think we lost you real quick, George. I think we're having some technical difficulties real quick. Hey, George, I think you're muted. There it is. You're good now. You're good now. I think you lost connection for a second.
Sorry about that.
No worries. No worries.
And then another big one I would say is business income and loss of business income and what triggers it and how it's triggered. For example, coronavirus, being shut down from the coronavirus. Unfortunately, that is not an insurable event and it will not be paid for business income. And business income, there usually is not a co-insurance. So that's more of whatever you can make it by. Let's say if you're out of business for a year plus due to not being able to use that location and rebuilding it. But yeah, I'd say insuring it to the proper coverages. And then another big one is ordinance and law. So, you buy a commercial building and it's not up to current code. And then let's say you have a fire, a partial fire. Well, the city's going to make you rebuild the whole thing back up to code now. That is a separate coverage in their ordinance and law. Again, very important to consider the type of building when purchasing the insurance, because ordinance, if let's say you're buying a building that was just built yesterday, you're not going to need as much ordinance and law because that thing's up to code. But you're buying a building that's even in like the 80s, 90s. Codes have changed since then, and the insurance, you need extra insurance to provide that it will be brought up to code in the event of a loss.
100%. And yeah, and I'd speak to that too, because a lot of times, and I can speak to Louisville, I can't speak to other municipalities around the country, but there's certain situations where you can buy a building and as long as you're not breaking in the walls, like you're not having to bring the building up to code, right? So I own a 4-unit property here in Old Louisville. It was built in 1880 and it was redeveloped in I'm assuming the 60s or 70s. I'm assuming the electrical and other things are probably not up to code, but if you start breaking into some of these walls, they're going to want you to bring it up to code. And so you're seeing a lot of situations where you may buy a building. Exactly. Grandfather clause, as Zenny said, that's similar. It's at least similar in concept in that, and so if you buy an existing structure and maybe it has some non-pertinent, electrical or whatever else, and for some reason it burns to the ground. I mean, that's an issue that you now have to address with what George is saying. And then the co-insurance clause, we were actually talking about it over lunch the other day, and he was explaining the concept in that let's say the insurance of the building is $1 million, it's $1 million building, you insure it only for $700,000, and then you make a claim of $500,000 because something catastrophic happens with the building. With a co-insurance clause, if you're not insured up to whatever the threshold is stipulated, you would only get 700 divided by $1 million, so 7/10 of the claim. So if you were to submit a claim for $500,000, they would only give you $350,000 for
exactly.
the claim. And so, even though you are insured for 700,000, you think, oh, I'm covered because, that's the worst case scenario that I foresee. That's when, it's going to hit you. And then, 150 grand for a business owner, an investor, and that may be, make or break. So, just things to consider. So that's awesome. And so one thing I wanted to touch on now is more so on the investor side. And there's, just to give you again context on the people who are listening, we have a lot of investors across the nation, and we've had people tune in from across the world. People tune in from Brazil, Europe, all over the place. And so, there are investors and developers out there that, have a need for commercial insurance, and they want to get a feel for what they need to think about when they're looking at some of these opportunities. So if you could kind of share a little bit of insights as far as that is concerned, I think that'd be helpful.
Yeah. So one thing, if you're buying a building that you're going to be leasing out to someone else, and you're going to want to know, even if it's a triple net lease where they're responsible for the insurance themselves, you might have problem. Let's say if it's a firework manufacturer, or a good example of it is wood manufacturer. Insurance companies do not like wood manufacturers, because there's a lot of flammable in the building. So that is going to affect what kind of tenant you have in there. Any type of retail is very low risk. Warehouse, again, pretty low risk, depending on what's being stored in there. So that's one of the things. Who will be occupying the building? That's going to affect your rates and your ability to get insurance. Again, like if it's a firework manufacturer, you're not going to be going to a standard market. You're going to have to go to an excess and surplus market that is not different deal, a lot more expensive, things like that. So that's one of the things that come in the spend of insurance. And then another thing we talked about earlier is age and age of updates. So the main updates that insurance companies ask for: roof, plumbing, and electrical. Those are the main three things where you will get it. Again, it's eligibility and pricing. Some companies, they'll give you discounts. Some companies will say you're not even eligible to be insured with us because the electrical is 40 years old, for example. But so those are the main three things in terms of pricing on updates. They want to know that kind of stuff. It depends on the size of the building, but a lot of times if it's, if we're insuring, 10 million plus, we're going to have a risk surveyor come out there and do everything. And they've got all these tools and stuff where, they put a little gun to the electrical box, and they can see if it's overheated in any areas and things like that. But, if you're buying, like let's say $1 million commercial building, not as big, you're probably not going to have all those inspections done from an insurance company until you reach a certain threshold in insurance.
Oh, for sure.
And another thing is, kind of while we're on the topic of bigger values of insurance, all the insurance companies, all the standard markets, they all go to reinsurance companies. Well, reinsurance companies right now are raising rates, which means the standard companies who actually are putting it on their paper are going to have to raise their rates as well. And I mean, we know rates it's just another piece of inflation. I mean, it costs more to rebuild. It's going to cost more to insure. And so we're seeing the market harden a little bit.
For sure. No. And the pieces of the components are pretty valuable with what you said. I mean, especially when you start talking about some of these larger commercial properties. I mean, we were looking, I had a shopping center deal that I did last year, and we had priced out what it would cost to replace a roof for a strip center, roughly 27,000 square feet. And we were getting numbers back in the tens of thousands, like $80,000 to $100,000 for the full replacement of the roof. In industrial buildings, it's going to be even more, especially if it's a very expansive type of building, 50,000 square feet. The roof to replacement cost for those types of items is pretty significant. And so it's definitely stuff to consider.
And when it comes to the insurance on the roof, there are options to do. Let's say if you have an older roof, an insurance company might say, well, we'll insure it, but we're only going to insure it for actual cash value. So they're going to depreciate the roof and give you So if you have a total loss, they're going to give you what the actual cash value of it is versus actually replacing it. And, those are things that all depends on risk appetite and situation. But, we do it both ways, actually replacement and actual cost. It does save a lot of money. And a lot of times it's the only way an insurance company will insure certain buildings without a full roof replacement. Because, you got 10 years left on the roof, you might not want to replace it just because the insurance company says to replace it. An option in that case is actual cash value.
That makes sense. Awesome. So one thing I want to touch on was related to leasing commercial property. As again, there's a lot of people that are listening to the call. They're brokers. They're representing business owners that are looking to lease commercial property. Maybe they're business owners as well that are leasing commercial property, and they want to get a feel for what exactly they need to do in order to cover their bases. So if you could kind of touch on that, I think that would be helpful.
Yeah. So from the perspective of sorry, you went off just for a second there.
Yeah.
From advising tenants who will be in commercial property and what they need for insurance.
Yeah. So so for commercial tenants. So, there's some people in the audience that are brokers representing people who are looking to lease commercial property
Yes.
and,
Gotcha.
or
Sorry.
they're business
Sorry, you
owners
went out
who,
just for a second there.
no
Got it.
worries. No worries.
Yeah.
Yeah.
Yeah. So typically, so on a lease, the landlord's gonna tell you what they require. And a lot of people are like, oh, I just want what the landlord requires. Well, a lot of times the landlord, the most typical requirement is a 1 million, 2 million general liability. So you're gonna, let's say you cause damage to your space that expands to other spaces, they're only gonna pay $1 million per incident. You could be on the hook for the rest of it. So depending on the cost of the whole building and the probability of, let's say, a fire originates in your space, well, how probable is it that it's going to affect other parts of the building? So that's one piece on the liability side, where they're protecting the liability covers the property damage and bodily injury that arises out of the course of business. So you want to make sure that the property that you're protecting yourself from damaging is going to be less than $1 million if that's what they require on the general liability side. Betterments and improvements is something that you want to insure yourself. They're not going to insure if you make updates to the space. Most likely the building owner is not going to repay you to redo those updates if a loss has occurred, even if it originated from somewhere else. So that's a big piece. And then loss of income is a really big piece too. And policies are written different ways on loss of income and what triggers it or whatnot. Let's say you're renting from someone who owns a unit in a larger space. Well, let's say there's a power failure that initiated from another space. You might not be covered on business income if it's a separate ownership. So there's a lot of factors to be that go in with all of those coverages, but obviously the general liability, building betterments and improvements, your personal contents in there. And another thing to look at with personal contents is to look at, let's say you're a seasonal business. Let's say you're, I don't know, something like a holiday, you got a lot of orders during the holidays or whatever. I've got a tea manufacturer as an example. Their big time of year is December. Well, they've got a lot more inventory in December than they have and leading up to than other parts of the year. So you might want peak season coverage. So insurance companies will say, hey, give us your busy dates. We'll increase the building personal property for this time period because you need it for this time period, but you don't need it the whole year. So that's another, if you have fluctuating inventory, that's another big thing to consider is how business personal property is covered. I think those are the main.
Those are big ones. And, George and I were working on with one of my clients locally leased about 10,000 square feet of industrial space. And they were a B2B business for convenience stores. So they sell all the bulk products to all these different convenience stores around the city. And they have a ton of inventory on site, which is significant in value if that thing were to go up in smoke. And so one of the big things that, we touched on when we were talking about insurance needs is like man, you have a lot of product in here that is quite expensive when you start adding it all up. That's all in these racks and stuff. And so, again, getting a feel for the business itself, and getting a feel. And again, like you said, it's very specific to what the particular use is. And that's why it's so important to kind of loop someone in who can.
Yeah. And in that case, if you go just off what the lease needs, you're not going to have coverage for that, because the owner of the warehouse, they're not financially worried about your business personal property. I mean, they might lose you as a client because you go out of business, but it's not something. I have very, very rarely seen it required from a landlord telling a business that's one of their tenants, insure your own property in here.
Yeah. No, and I'll attest to that, because usually in the leases, when you analyze the leases, there's the insurance clause, which is something you review, and it's again general liability typically. If it's triple net lease, they may have a property insurance clause and everything as well. So that makes sense. So we touched on. Go ahead.
Well, while you speak of the triple net lease, also if you are doing a triple net lease as the lessor, and you want to make sure that they are insuring it to value. And I would suggest getting a copy of that, and having a copy of their policy, number one, and then making sure they're listed as an additional insured. I can't tell you how many times I've seen the correct insurance in place, but someone not being listed. That is a very important thing for them to collect upon an event, to be listed on the policy.
Yeah, and that should be stipulated within the lease agreement. So that's when you need to get a commercial lawyer involved when you're drafting. If you're a business owner, or if you own commercial property, or you're representing people who own commercial property, you need to make sure that those leases include those types of clauses within them. And again, if you're not a lawyer, don't try to write it yourself. Get a commercial lawyer involved. But those individuals who are specializing in commercial real estate should be able to know exactly what needs to be included within those agreements. So. Awesome. So next up is pertaining to the purchase side. So, there's going to be slightly different things that need to be considered from someone who's leasing commercial space versus purchasing it. So I thought, if you could share some insights on that, that'd be helpful.
Yeah. Well, on the purchase side, like I was saying, the main things that you want to look in the inspection is, or documentation from the current owner, of updates to electrical, updates to plumbing, any kind of mechanicals, HVAC, any kind of mechanicals like that, and then the roof. Those are the factors that are going to affect your insurability and the price you pay for insurance. So that's a big one. And if you're looking at it from a tenant standpoint, one of the things, and we kind of touched on this earlier, about what type of risk is inside the building. But if let's say you're a tenant that is, like a warehouse, we'll keep going with the warehouse distribution type tenant, but you're next to a firework manufacturer, again, not something you're going to have an easy time getting insurance for. You're not doing anything that's high risk, but you share a wall with someone that is doing something that's much higher risk in terms of flammability, especially. So that's one thing to consider. I would ask who else is in this building, and anything that has to do with combustibles like flammables. It's a big no for insurance companies. They shy away from it, or they make you pay a pretty penny for it to insure.
For sure. Yeah, and that kind of lends itself to, advising your clients as far as new tenants are concerned too. So if you're representing if you own commercial property, or you're representing people who own commercial property, and a new tenant comes to the forefront that potentially could fill a space, I'm sure that's something you should consider, as far as insurability is concerned. Because I know,
Absolutely.
For example, with smoke shops, for example, some banks don't even loan if you have a smoke shop on site, or it's different types of uses that may not be in line with what they're trying to loan on. So, those are the type of things you need to consider prior to just saying, yeah, let's pull the trigger on this tenant. There's other factors at play that you need to confirm with other sources to make sure that you're in fact making the best decision possible.
Yeah,
so
absolutely. Guns are a big one right now, where a lot of companies are shying away from that with all the general liability implications that are coming along with that. Yeah, it's definitely, insurance is always a changing landscape. It's a slow changing landscape. Insurers don't like to insure something until there's been long history of them. That's why a lot of these, for example, like CBD warehouse spaces and stuff like that, where it's, the risk isn't terrible, but it's just there's no data on it.
Yeah.
So insurance companies for the most part are very conservative.
Yeah, it's like banks. So
Yeah.
definitely not a unique thing. So awesome, man. Well, I have one more question for you, and then I wanted to open up the Q&A. As far as maybe some of the best resources that people can access to learn more about, the insurance space. And again, maybe not from like as being a commercial insurer. And if you are a commercial insurer and you're listening to this, then obviously that's great too. But if let's say I'm a broker or an investor or owner or something like that, or business owner, and I want to learn a little bit more about some of the things I need to consider as I'm going through the process of securing commercial insurance, what are some of the best resources?
Yeah, I would say reach out to an agent, reach out to multiple agents. Um, you know, you might not realize that one agent didn't let you know something that's like an important piece until you talk to someone else. So I would say reach out to resources. I mean, uh, most people in my industry are willing to have a conversation with someone and just give advice on this stuff. I know I am. I'm happy to, and there's a bunch of other people, but it definitely helps someone local in the market that you're investing in, because they know the market, and then they know the regional carriers in the market. Like you mentioned before, I'm a broker and I represent a lot of national carriers, but I also represent regional carriers. Sometimes regional carriers can be very competitive against the national ones, and part of that has to do with just geographical footprint and with weather patterns and all that stuff. But it really helps to talk to, like, let's say, for example, have a client that has properties in Southern California. I just don't know that market as well, and even the laws and the way insurance is written is different state by state. So I would really suggest on talking to someone who's familiar with your market. Just as real, it probably doesn't seem like you would need it as much in insurance as real estate, which for sure, much more important in real estate for the realtor to be very knowledgeable about the local market. But I will say it does help in the insurance side as well.
Oh, for sure. Yeah. And the more people you can talk to, I mean, that's one of the things that I did early on in my career is I just started reaching out to a bunch of different, nodes within the process, including insurance agents, including banks, and really trying to get a feel for the landscape. And one thing I'll even add on top of that, which again, a lot of insurance agents, there's a lot that insured personal lines, or, they're more centric towards home and auto, et cetera, versus just strictly commercial insurance as well. So just because, they can insure a commercial building, that may not be what they do on a
Yeah.
day-to-day
So
basis.
at the end of the day, it is the same license in every state to sell home and auto that it is to sell commercial insurance. Doesn't mean that you're getting someone knowledgeable on the because there's just a lot of differences in property insurance when it comes to personal versus commercial. And that's even this, let's say you have the same exact property. Let's say it's a single family dwelling. The insurance will look different if you're insuring it as your personal residence than it would if that's part of a portfolio of single family homes.
Definitely. Great advice. Okay. So what I wanted to do just to make sure we had enough time was to open up the Q&A. So I'm actually going to look this up on the chat box. If you guys are watching this on social media, be sure to type in the chat box and I'll be checking those as well. So, all right. So Zenny was mentioning the grandfather clause that we had talked about earlier, but even drive-throughs with restaurants, encroachments, et cetera, need to really scrutinize surveys. So that's some great advice. You're right.
Yeah,
Survey is going to give you a lot of information about the property.
Yeah, a lot of times with the encroachment and stuff, which it is part of commercial insurance, is a different side of it, but a lot of that gets into the bonds, like surety bonds and things like that, like encroachment bonds. And I'm not sure if that's what they were particularly talking about in that, but that is another thing to consider.
Definitely. All right. So Paula, hey Paula, great seeing you on the call. So if it's commercial and you are buying, let's I'm sorry. I'm just trying to read
Yeah,
this
I read
correctly.
this one, so I get it. Yeah.
Well,
Absolutely.
repeat the question too, because
Yeah,
we're
yeah.
on a
So
podcast format.
Paul is saying, it's a different rate for commercial builders versus residential builders, and is that reflected in the insurance? Absolutely. At the end of the day, you want your insurance to be what it's going to cost to rebuild. So if you have a warehouse, it costs whatever it costs in your area, but we're definitely going off of the going cost to build in the area. And so that definitely does look different for commercial versus residential. And again, that probably, you could speak to this, that probably goes back to the code thing partially.
Yeah. Well,
There's a lot
that's
of other stuff. There's a lot of other factors,
oh, sure. But
but
it's a
but
big
yeah,
reason
no,
for it.
absolutely. Your price per square foot for insuring a commercial building is probably going to be higher in most cases than price per square foot insuring a home. Everything else held constant. But
Yeah, I know. And a big part of that factor is because of the public safety aspect as well. Because in commercial property, typically you're dealing with public safety as opposed to single family home where you're single resident. You're not having to deal with, 1,000 people potentially. If you have a restaurant, it could be tens of thousands of people that come through your doors on a regular basis. So, there's additional codes, there's additional permitting, there's additional, layers of things you got to do in order to make sure that you're building it up to the proper code. And that's one of the big reasons why commercial properties are going to be a lot more, typically more expensive than a single family home. Okay. So Zenny asks, do pools and multifamily properties complicate things, especially in AZ? Pool barrier requirements are in place because of high rates of child drownings. That's a great question.
yeah, absolutely. That is going to be a factor. You'll see it on the liability part. In most insurance policies, I haven't really seen any that really give you a blended rate. They'll give you your rate that you're paying for your general liability and then what you're paying for your property. So you will see an effect on the general liability line item when you have swimming pools.
Awesome.
And especially for the insurance companies that like multifamily, none of them have that as like an exclusion per se, but they're definitely going to charge you for it.
Advice. So Magali asks, for leases, what is insured in the building or the content only?
So okay, yeah. So like if you're leasing a building, right?
Yeah, if you're leasing, so I think maybe we can talk about it both ways. So you're saying typically in leases, what is required? Okay. So
okay. Retail space. So like,
yeah,
let's say, and we can do an example with triple net and without triple net. They're different, obviously, for insuring. So let's say you have a retail space and you're not responsible for insuring the building. You're going to be responsible for carrying your own general liability. So that means if anyone gets hurt on the property or you cause any property damage to the property or to any other property, example, set a fire, burns down the next unit or whatever, that's on your general liability. So general liability, property damage, bodily injury, that's what it covers. And then a separate part of the policy would be business personal property. Business personal property is contents. So that will be a separate line item. You can have contents. And like we talked about, you can do certain things with your contents. Let's say you have peak season, you can make it so I get 25, most of the year I only have 100,000, but when Christmas comes around, I got $250,000 in inventory. You want to look at that kind of stuff if you are seasonal business. And then betterments and improvements. If you move into a space and you put work into that space, whether it be a part of your lease agreement that the building owner pays for better improvements or that you pay for it, regardless, you're responsible for the rebuild of it in the case of a loss. So that's going to be building tenants, betterments, and improvements will be that line item coverage. So there's really three different pieces there. And then of course, if it's a triple net, you're in charge of insuring the actual building. And guess what? If it's underinsured, guess who the landlord is going to come to for the extra money? You.
100%.
So again, even if you don't own the building, but you are responsible for insuring the building, you need to make sure you have proper insurance to protect yourself financially.
100%. And I didn't even think about, which is something you touched on, which is huge in the commercial space, is the build out. Because there's a lot of situations where, in order to incentivize a tenant to move in, they may offer some form of tenant improvement allowance, meaning the landlord is willing to pay for some of those improvements to the space in order to make sure that you're able to fit within the space. But if something were to happen that would be catastrophic, that's ultimately your responsibility. It's not the
Correct.
landlord's to be able to replicate. So, again, something to consider. That's super common in the commercial space, in particular on some, if for office buildings, for retail, there's typically some landlords sometimes offer tenant improvement allowances. So, all right. So Jill asks, this is a great question. Do you recommend using the replacement cost value for the building if it's listed in the appraisal?
So that depends. I would ask your agent to show their rebuild cost estimator. So every time an agent goes in and gets a quote for a building, there's a building cost estimator software used by insurance companies. There are different one, Marshall, Swift and Beck, CoreLogic. There's a few out there, but they're pretty much the same when they pretty much spit out the same numbers when you put in all the different variables and type of build and all that stuff. But I would definitely be wary of rebuild cost, replacement cost on the appraisal, just because that's not necessarily taking in all factors. And with that said, I don't know, do you want me to go into like a little example of the co-insurance and why it's important to, so I would just, I don't know, I can have people reach out. There's a simple formula for it, but basically in every insurance contract, the typical options are 80% co-insurance, 90% co-insurance, 100% co-insurance. 100% co-insurance, you have to insure that building every penny to what it costs to replace. 90%, 80%. I like to do 80%. It's a little more expensive because you don't have to insure as much on the building, but it gives you leeway when it comes to a claim. So with an 80% co-insurance clause, let's say the true rebuild cost is $1 million. The insurance contract says we will not penalize you if you have it insured for at least $800,000. Now that means that doesn't mean in a total loss they're going to give you an extra $200,000, but it just means that they're not going to penalize you for a smaller loss. But yeah, I said someone wanted the co-insurance, so I should have had a whiteboard. I'll do chicken scratchers.
I mean, if you want, what we can do too is, like you said, if they wanted to reach out, because I just want to make sure that we are able to relay the message too in a podcast format. So Jill, yes. I would highly encourage you to reach out to George too, because he's a wealth of knowledge and he'd be happy to walk you through examples. And if you want, I could even include a link in the description for the podcast format and YouTube that references that example too, if you'd like. And we could take a picture or however we want to do it, and it can kind of lay out exactly what you mean. So. Awesome.
Yeah, but basically, just real high over there's a formula of what you should have, what you actually insured it for versus what you should have insured it for. So let's say you should have insured it for 100,000 and you only insured it for 80,000. You're going to get hit with a 20% penalty, regardless of the size of claim.
Yeah. And that again, like we were explaining earlier, that could be huge. I mean, if you're talking about a significant loss.
Yeah, let's change those numbers to millions instead of.
Oh yeah. Yeah. And in situations where there's a catastrophic event, I mean, a fire that burns down a $5 million building and you're underinsured, 20% could be $1 million, so it's pretty significant. Awesome. So I just want to make sure, do we have any other questions for George? And maybe I'll ask you one question, George. I wanted to see, is there anything else in particular that you wanted to share today that maybe I didn't ask you that you think would be pertinent to the discussion?
No, I'd say just big takeaway. Insurance isn't a commodity. Look at the ins and outs of a contract. No two contracts are the same. So that would just be my advice.
For sure. And then Magali said contact info. So if you want to type it away in the
I'll,
chat box.
You know what? I'm going to put for your listeners, I'll put my personal email
Sure.
on here.
Definitely. And then also we're going to include the phone number and email as well for George in the description below if you guys listen.
You have my company email as well.
Yeah.
This, since it's your podcast, I'm happy to share my personal, which I answer a little more often than I try to keep 9 to 5 on the work. It doesn't always work, but
yeah, he is amazing. Yeah, Paula said that you're great at what you do, and I would attest to that as well.
Thank you, Paula.
He's super responsive as well. So if you guys have any questions in particular and you just want to throw an idea off him, feel free to reach out to him. And again, like I said, this will be recorded as well. So if you guys want to watch this back in a YouTube format or a podcast format, it will be available for you guys as well. So again, George, thank you so much for stopping by.
Yeah,
thank you all. Yeah, of course. And thank you all for tuning in. As always, like I said, we do this every other week. And we try to invite speakers from all across the country to talk about different commercial real estate topics. So hope you enjoyed this week's episode, and we'll see you all next time.
Thanks, Raphael.
See you guys. Bye.